We've got Mr. Scott Bauer, the CEO of Prosper Trading Academy, joining us for a look at a few names that he's got his eye on. Hey there, Scott. Hey there, welcome. Retail's been a focus, Scott, for many weeks now, and well, it remains a focus into the end of the week with Nike reporting after the bell Friday, but also with the holiday headed our way. Let's talk about a few names that are on the move. First and foremost, let's talk Etsy, ticker symbol ETSY, to a new high. What are you seeing there?
To a new high is right, and there's been lots and lots of call buying there. It's finally easing up a little bit. We're starting to see put call volumes start to even out a little bit, Ben. Volatility is still pretty expensive, though, and I think what you're seeing is now maybe some people coming into the market that have either been long the stock or possibly long some call options, maybe starting to hedge that a little bit. It's been off to the races, obviously, in this stock. Great numbers. I mean, what do you say about it? But it might be coming to an area here where it may pause a little bit.
Scott, a lot of this has been bid up on some of these pandemic trends, but also related to stimulus measures. I mean, there's nothing on the table at this point, nothing concrete at least. I mean, I guess the concern is that, potentially we go into the holidays without one, and then maybe even more so a concern is that if we get one, investors aren't impressed by it, and then we kind of just find ourselves in a very similar situation as we come into the new year, basically looking for more. But certainly the optimism related to and expectations that we're going to get some seems to be giving this one a lift.
No doubt about it. And, I think we will get stimulus. We've been saying this for a while, probably by the end of the year. But like you said, is it going to be a buy the rumor, sell the news type of event? So when we get it, is that, okay, we got it, boom, we sell off a little bit.
Okay, a couple other retail names you have your eye on. I saw yesterday Stifel downgraded Stitch Fix to hold from a buy. They have a price target of 170 on the stock. It's currently trading 71.60. No, traded up to 71.60 today. Currently trading 67.88, but they're up 2%.
So someone's got to explain to me how you have, you go from a buy to a hold, but yet your target price is 2.5 times where the stock is trading right now. So, I don't know what makes sense to me there. What I do know is this stock is up almost 100% since they reported earnings just, a week and a half or 2 weeks ago. Little bit of selling, little moderate selling in there. Again, I think there's some put buyers now. If you look at option activity coming into the market, probably just taking some money off the table.
All right, an insane move after earnings, and they have yet to look back here, Scott. It looks like if higher today, basically they've only seen 2 down days since that first week in December. They announced on the 7th, it looks like. Stitch Fix, again, into a new high up to 71.60, currently trading up 2.25%. Let's talk LULU. Yesterday, Morgan Stanley had a price target increase for ticker symbol LULU to 381. That's from 356. They have the stock with an equal weight rating. They see activewear tailwinds, they said.
So, that's where the stock is trading right now, basically. But I look at LULU, and it's almost the complete opposite of what Stitch Fix and Etsy did, where on earnings, the stock actually got hit a little bit. However, it held technical support beautifully right around the 340 level, which is the 50-day moving average. And that stock is up 10, 12% since then. So, there's heavy call buying coming into this market in LULU. And it certainly looks like it wants to hit that 395, 400 level.
All right, today back to levels they haven't seen since the first week of September. Let's move on here. You've got FedEx on your radar as well.
Yeah.
Earnings on the close up 90% this year. This is another one that's been benefiting from, increased costs that they've been passing on to the consumer, and also the pandemic trends that we've been seeing in terms of more e-commerce online shopping.
2 words for this one: cautious optimism.
Okay. And
the reason I say that is much like we just talked about the stimulus bill. There is such lofty expectations for this earnings report that if they literally don't hit a grand slam, knock this out of the park, investors may react a little bit negatively to this. I am very bullish in this stock. I would actually love to see a pullback to maybe the 270, 275 range, which to me is a huge buy area here. But it's hard not to like this stock. The analysts have been upgrading the heck out of this thing for the past 30, 60 days here. It's really hard not to be bullish in here, but again, cautious optimism.
All right, that 270, 275 area that Scott just mentioned, that's the middle of the range that they've been in basically since the first week in August. Let's take a look at what's expected here in terms of earnings. We've got EPS, looks like it's going to come in around $3.90 a share there, they think, and revenue is expected to come in at 19.33 billion.
Yep.
Now, let's talk, Scott, a little bit about some of these trends that we've been seeing. We were talking about retail trends, and one of the trends I wanted to get your thoughts on that we've been seeing is jobless claims, which hasn't been trending in the direction necessarily that we would want it to see, especially into holidays, especially when we've got these retailers in focus right now. I mean, if we don't have jobs in theory, then we're not spending as much money, especially if the stimulus isn't coming through yet. Talk to us about what you're seeing there and your thoughts in this morning's number.
Not to have a play on words here, but I don't mean to be a Grinch or a Scrooge, but these jobless claims numbers are downright awful. Yeah. They really are a reflection of the state of what is going on, reality on Main Street now. And you and I have talked about this for quite a while, Ben, that as the pandemic, surges and as it continues on, and as we get closer to much of the benefits, the jobless benefits that people are going to start losing here, these numbers keep climbing. So that is not a good thing. In fact, in my opinion, if we had not seen what we saw out of the Fed yesterday with Jerome Powell's commentary yesterday, basically saying, yep, they're still here, there's a Fed put, we're going to do whatever we can, I think we could have had a really negative reaction to that jobless claim number this morning. It's a very disturbing trend.
Is that what stood out to you in terms of the Fed comments yesterday, Scott? Was basically them reassuring investors, reassuring the market that, again, they're going to be there for them?
Yeah, they pretty much quashed anyone's concerns about inflation. They certainly addressed it, saying, it's going to be out there at some point and we're going to let it run. But for right now, we will do whatever we need to do to get this, economy back on track.
All right, the held bond purchases at current levels. We didn't really see rates spike up in reaction to that. Nope. I was a bit surprised, but certainly it does feel like the Fed has our back. So, Scott, appreciate it. Clearly, you have our back here on Midday Movers, bringing a few names
that
you've got your eye on as well and think we should also. Ladies and gentlemen, Scott Bauer is the CEO of Prosper Trading Academy.